Hey, what's going on, guys? Welcome back again to another video. Before we get into this, it's going to be a banger, trust me. I just want to thank you all for the amazing support. Okay, without further ado, let's just jump into the charts and I'm going to show you this amazing way to trade supply and demand. So you can see here we have GBP pounds USD dollar on the charts, right? Now I've made a video on smart money concept, and a lot of you have absolutely loved it and requested me to do more smart money concept videos. So this is how I personally now trade going forward, right? I like to have as many confluences as I can possibly get before entering a trade to be really confident and have confidence to hold my trades even longer. So how do you do that? Now, if we combined our smart money concept strategy with our psychological numbers, that just gives us an extra confirmation and to be more confident. And I have an amazing example that I can give you guys right here on the chart. So we all know if market break structure to the downside, right? Market break structure to the downside. Fine. Now it made our if we all know market structure, we have a high, low, lower high, lower low, and now it's going to form a lower high. But how do we know what is the highest point that the market is going to retrace to, or where will it stop? Where could it possibly get to before it melts back down, right? Now we all know market structure. I've made a video on that. If you haven't, go back on my YouTube channel and watch that. So now we have a low, we have a high, a low, a lower high, a lower low, and now a lower high, correct? Now, how do we know when will this lower high be complete and ready to sell? So we can jump into a sell. We combine this with our smart money concept strategy, which is supply and demand. So we can see how we have an amazing order block right here. And if you just zoom in, let me just remove this market structure line so you guys can see it very clear. You can see how we have this little supply area, or an order block if you want to call it supply. And look what happened. The market melts down, correct? Now we're looking for our lower high to sell. Comes up, literally touches our order block. But look what else it touched. Our psychological number that we put on our chart, right? Now, I do not have on each and every psychological number. Like for example, I have every 250 pips, I put a line. So I have 132,500, I have 13500, I have 137,500. So basically, every 250 pips, I have a line. It's basically the quarter level theory combined with psychological numbers, combined with supply and demand, combined with smart money concept. It's just a whole bunch of confluences, right? To give me the best chance of winning each and every single trade I take. Because if an order block just lands in the middle of nowhere, like most people could have probably targeted this order block here that you see on your screen and sold. But look what happened. The market slashed through that and went to our higher order block, and that order block has landed on a psychological number or a support and resistance line, right? Because we can use psychological numbers for support and resistance. So this alone has, like, already I have 5 confluences why I should take this sell when the market reaches that supply area. So what I want you to do is I don't like to put a line on each and every psychological number, like for example 132,500, 13300, 133,500, 133,400. My charts would be a little bit too cluttered, right? It'll be a bit too busy for my eyes. I like my charts to be very clean. Like, look at this, 3 lines, supply and demand. I'm perfect. You don't need all the extra stuff that you put on your charts. So you can even see I have no indicators as well. I don't use indicators. You don't need indicators because indicators reacts to price action, not the other way around, right? So whatever price action does, the indicators are behind reacting to what the market price is gonna do. So it's not an action. Like, I don't know how to explain this, but it makes no sense to use indicators. Like, it just doesn't, because when price drops, then indicators react. It doesn't just react and then drop, you know. It doesn't, the indicators don't tell you, hey, the market is about to drop. No, the price drops, then the indicators follow. So how do we enter this trade? Basically, let's just say for the sake of the video, play this market back to here. All right. And the market is now, we've marked up our quarter level theories, which is every 250 pips, and we have our supply area, our order block marked up, and the market is now going to the upside. We don't do nothing, we just wait. We put an alert here and we let the market come to us. So the market, let me just play this, the market getting closer. Now when the market gets this close, I drop down. Like, mind you, this is the daily time frame, so it would take some time, right? But our risk reward is absolutely insane, and you'll see what I mean by that. So we drop down to the 4 hour. It's still too high for me, so I will drop down to the 1 hour. Now look what happens on the 1 hour. Watch price and see what it does. Let me delete this trade from earlier. All right, let's see. Market comes up, comes up, comes up. Now we have an alert there at the supply area. The price has touched it. You've been alerted. You jump on your phone, on your laptop, whatever. But I recommend you jump on a big screen so you see what's happening. Market comes up, boom, touches our supply, boom, touches our psychological number. First sign, boom. See that bearish engulfing? That's your sign. If you've watched my previous videos, bearish engulfing candles are one of my last confluence to enter a trade. So it's the last step before I execute any of my trades. So I see this massive bearish engulfing, and engulfed all three of the previous candles. So this one candle engulfed 3 hours, the previous 3 hour candles. As soon as I see that, I jump into a sell. I jump into a sell on the close. My stops just above here, and my take profit is our next psychological number, which is all the way down here, and that is 250 pips. And this trade is a 1 to 7.8 risk reward ratio. We have 30 pips at risk, but our reward is 230 pips. So for me, that's a perfect trade, and you basically never almost in drawdown. Look what happened. Market touched into our supply area. It touches our psychological number. It gives us a bearish engulfing. It's telling us that, hey, sellers are now in control. You can sell now. So play the market, and the market comes up a little bit, and boom, drops. Right there, just play this, and the market just goes on its way. Now mind you, this would have took a while, but our risk reward is insane. We're not catching 20 pips and 30 pips. We're catching moves over 200 pips. So of course it's going to take time. Be patient with the market. Let the market come to you. Don't rush it. So this is how I use, and you can see the price is still dropping here. It might retrace now a little bit and then continue. My next target for GBP USD is 1.35,000. Anyway, I hope you guys found value in this and you see what I'm trying to do here. I don't just jump into trades. I don't rush trades. I let the market come to me. It takes a while, but hey, you don't have to be in the market all day, because the more you're in the market, the more you're at risk. The less you're in the market, less is more in this game. You have to understand, less is more in this game. Now, combining smart money concept with core level theories, with psychological numbers, everything together is giving us a great edge when it comes to trading, and it's giving us the best confluences that we need to have confidence in our trades. I don't want to make this video too long. I hope you guys enjoyed today's video. I hope you found value. If you did, please like, comment, and subscribe, and I will see you in the next one.